This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending September 19th, 2020. Our question this week: will the stock market always go up? The answer will be provided later in the video. The market does one of three things every day: it goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was down. It was the third down week in a row. The Dow Jones Industrial Average decreased minus 0.88% on Friday and was down minus 0.03% for the week. The S&P 500 decreased minus 1.12% on Friday and was down minus 0.64% for the week. The Nasdaq decreased minus 1.07% on Friday and was down 0.56% for the week. Looking at the week, the market was up on Monday and Tuesday, mixed on Wednesday, and down on Thursday and Friday. The Dow Jones Industrial Average had 3 up days and 2 down days, while the S&P 500 and the Nasdaq had 2 up days and 3 down days during the week. The Nasdaq has fallen more than 10% from a recent high, so the Nasdaq is in a correction. The new unemployment claims were reported to be 860,000 versus 875,000 expected. Continuing unemployment claims were 12.63 million, a more than 900,000 decrease from the prior week. Congress still hasn't come up with a new pandemic stimulus deal, but a deal to help out the airlines seems to be in the works. The White House is mulling over a deal to have Oracle buy a large stake of TikTok. Snowflake, a cloud data platform provider, was introduced into the market. Their shares soared. It was the largest software market debut in history. The Federal Reserve announced that they would keep interest rates low for at least another 3 years. And it was reported that 60% of small businesses that closed because of the pandemic would not be reopening. New unemployment claims, congressional actions and inactions, corporate mergers and buyouts, new stock offerings, Federal Reserve announcements, and business closures are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up, down, or sideways is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. Which brings us to our question of the week. Will the stock market always go up? No. The stock market will fall, and it may fall very hard, very fast, and very far. And it could take decades for it to recover. For example, on September 2nd, 1929, the market hit an all-time high. But then it fell. Actually, in October 1929, it fell hard. And it did not recover and surpass its September 2nd, 1929 all-time high until September 20th, 1954. That is more than 25 years. And in between that time, on March 1st, 1937, The market hit a high and it did not recover from that high until September 25th, 1950. That is more than 13 and a half years. Will the market ever take a decade or more to surpass a recent high? Probably not. Nowadays, the market is juiced. It is juiced by the powers that be. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the president, the Congress, that is politicians, the big banks, big corporations, and the most powerful of them all, the Federal Reserve. These powers will do what they must to drive the market up. However, sometimes there's a conflict between the powers. For example, right now, the Congress doesn't really want the market to go up because if it goes up, it will help the president. The president, of course, wants the market to go up. So, from now until the election is over, the market is probably going to be very volatile. That is, it is going to go up and down. Do you understand how the powers that be drive the market? Do you know why they drive the stock market higher? Do you own any stocks? If not, why not? Are you afraid that the stock market will fall? The market will definitely fall. After all, it has fallen for the last 3 weeks in a row. And even though the market recovered from its pandemic lows, it has dropped back down below the pre-pandemic high. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFreedom.com. Here is my trading watch list from the week ending September 19th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Moderna, ticker symbol mRNA. It is in the second column. It increased 17.75% for the week and was up 2.29% on Friday. Moderna is a pharmaceutical company that is working on a COVID-19 vaccine. They are in the 3rd week of clinical trials. That's 3rd stage of clinical trials. I had a trade on Moderna this past week, and I generated cash flow from it. I have generated cash flow from it in the past as well. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it by using the Southside trading strategy. The Southside strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the 3rd column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of September 19th, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY. Year to date, my portfolio is up 20.43% versus 8.69% for SPY, a difference of 11.74%. I am beating SPY by 11.74%. This week, equities, including puts, calls, and ETFs, make up 65.76% of the portfolio. Cash is 34.24%. The cash flow generated for this week was 0.85% of the portfolio account value. The account value increased by 2.63%. Meanwhile, the S&P 500 ETF SPY decreased by minus 0.98% this week. I sold option contracts on 4 positions this week, 3 calls and 1 put, that range from $206 to $421.67. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolOfFinancialFreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the SouthsideSchoolOfFinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on Lulu.com and Amazon.com. Please like, share, subscribe. ADOS, ADOS.